Let me welcome in Anil Rego, who's joining us on the show today. Anil, great to have you with us. Let me first get your strategy on the market and really where you feel we're headed now that we've hit these new highs.
Yeah, so when I look at the long term, one is very, very bullish. So I think there's no question that at least I believe that this is the decade of India, and we should see some of the index numbers that we've not, probably even imagined. Okay, in the short term, though, one has a bit of a concern around, let's say, the Nasdaq, and at least my thought is that it has a potential for one more down leg. Okay, and if that particular down leg happens, typically hopefully that will be the last leg and the sharpest, unfortunately. Okay, and if something like that happens, we should see some bit of volatility around India as well. So I would be a little bit, say, cautiously optimistic at this point. For a long-term investor, I think there's no issue. Somebody can come and buy in on the dips if you see good levels, and should do well.
All right, cool. Which pocket of the markets, Anil, do you feel, we're going to actually see further opportunity in, where you feel valuations are perhaps attractive, or would you be of the mind space that says that go for some of those tried and tested names that are likely to be immune to any kind of volatility or uncertainty in the interim?
Yeah, so I think we've seen a good mid-cap rally, for almost like a couple of years, and that sort of has started coming off a little. So I would also believe that trend may continue a little bit, that large caps sort of and the established names, the big names, may sort of do relatively better. Mid and small caps may, in my view, just take a bit of a breather. But yes, on the valuation side, it's interesting that post-COVID, while you found even the index continue to go up, right? The valuations started coming down as the earnings growth was very good. And that is, I think, something, there to last for a period of time. Yes, there may be a bit of hiccups here or there, but I think that hopefully earnings growth has come back to India for a longer period of time. And that, I think, should drive sort of markets. In the short term, I think, say, the large cap established names should do better. In the maybe there'll be the mid caps and small caps may take a bit of a breather and possibly then sort of continue once I think the large caps sort of move up again. While we are closer to all-time highs, I think typically when breakouts happen, large caps sort of lead that, and then followed by the mid caps. So I think investors can have a bit of a balanced view, and the dips, if they happen, I think are things to buy into.
Okay, fair enough. In terms of financials, how would you approach the financial basket right now? What's looking attractive to you? Are you looking for any potential movers in the PSU pack as well?
Yeah, so I guess the financials have done well, especially the banks, and the PSU banks, of course, have really turned around and run away. So suddenly, everybody realized the valuations have become attractive. So all the PSU banks started moving up, and probably that's sort of there to stay for some period of time. Though it's done up fairly sharply, so one could see falls in case there's global volatility out there. Similarly, the private sector banks, I think, also are for somebody who looks to invest in stable stuff. You're seeing the credit growth growing, and various parameters around the NPAs. Just to step back, we had a bit of a deleveraging cycle that happened in the previous decade, and this, I think, will be a decade where the leveraging happens. And so if that's the case, I think banks will continue to do well, though they may be a little bit volatile because they have moved up a bit.
Okay, let's go across to Tanya, see what else is buzzing this afternoon. Tanya?
Well, absolutely. First of all, shares of Easy Trip Planner surged almost 16% in the trade today. They were up 31% in the last 2 days as the stock traded ex split and ex bonus. Now, a meeting is scheduled to be happen on Wednesday to approve the allotment of bonus equity shares. Then, shares of delivery hit their all time low today. They were down over 4% on the back of stake sale by CA Swift Investments. So basically, the lock-in period for the pre-IPO investors ended yesterday, and CA Swift Investments sold half of its holding in delivery at an average price of 330 rupees. Paytm shares also took a beating today. They hit its 50. Paytm shares hit its 52-week low after experts from the Macquarie Group said that Geo Financial Services can pose a significant growth and market share risk for players like Paytm. And also, ever since the lock-in period expiry, investors have been diluting their stake in the company. Nike also tanked over 4% in today's trading session. Now, Lighthouse is again likely to sell a stake worth 320 crore rupees in Nike via block deal. Remember, on 16th of November, Lighthouse India Fund sold 3 crore shares of Nike in a bulk deal. Back to you.
Thanks for that, Tanya. Tech names, Anil, let's get your view in on this. Everyone's been waiting for this collapse, which is still to come, but we've definitely seen some of these stocks being plundered in the last few trading sessions. What's your take?
See, it's not surprising considering that actually Nasdaq is down almost like the index is down say 30% on a one-year basis. So that's been really carnage out there, including some of the largest names where people thought they're not going to. There's no chance that they can sort of come down. COVID benefited them, etc. So that is one huge a point that will be a bit of a drag on the technology sector as well. And the second part of it is I'm a little bit negative on, say, the US because if I track market cycles and I'm a bit of a contrarian investor. So the view was from the start of this decade that the US did very well for more than a decade. Okay, and data has shown us that whoever is the leader of the decade then sort of lags for the next 1 or 2 decades, and there's a deleveraging cycle that sort of happens there. So we think that there's a lot more pain there in the US. So a lot of the IT services companies out there, I think, will remain a little volatile. And if because their largest customer base geography spread is in the US, and that's something to watch out for. So I'll be a little cautious on technology stocks, even though they look very attractive. You just keep in mind that when the Nasdaq in the 2000 fell, it fell almost like from 4,800 levels to almost like 1,000 levels. So it's a very very large carnage when they got over the cycle turned. So I would just be a little cautious. Wait for, let's say, the a little bit, maybe a quarter or so, the US markets, if it bottoms out, and that time maybe I would, if at all, I would bottom fish. That's the time I would go and look at it, but I'll be a little cautious on technology.
Okay, slightly cautious. That's the view coming in there from Anil when it comes to some of those tech plays. Easy Trip up 18%, Mazgaon Dock is up 12% today, Cochin Shipyard 6-7%, Varun Beverages, Shriram Transport, some of the others there. Glenmark Pharma's up 2 to 3% as well today. Just taking a look at some of the other movers from the broader markets and anything else that's catching our eye in particular. What are you making of some of the trends in aviation? I know they're limited pickings from a listed company point of view, but just from the way we've seen traffic move, latest data is also out. And the fact that we've got a couple of new airlines coming back into the fray now towards the end of the year. Interglobe itself is, of course, up 1.5–2%. Would that continue to be the preferred pick? Are you looking at aviation as a sector that stands out?
Yeah, so aviation is not something that we've been looking at too actively. But the point of view is that, yes, as a sector, maybe it should do well. We don't think oil prices, will go up too much. So that is sort of one benefit. And I think the whole consumption theme that sort of they run, that will do well. I would always stick to the largest and the best. Okay, so we don't hold Interglobe or Indigo, but I would think that if one wants to look at, probably it's better to look at the leaders in the pack, and they also have a whole traction sort of coming behind them. If you go into any flight, you'll find that seats are full, So that is something that will drive growth, and I'm sure the consumption play of India will, make them do well for in the future.
Okay. And when it comes to discretionary spends, I mean, is that, are you bullish given the overall outlook on the economy? And I ask because markets are bullish, even though growth, projections are actually coming down somewhat. But markets continue to be bullish, and discretionary is meant to be one pocket that's expected to fly on the back of that. Do you see any risks to this given the current inflationary environment?
No, so I don't see too much of risk to the discretionary spending because I think, at India level, I think we've continued to do well. The economy has been growing, so it's a little different from, say, the global setup. Okay, and even if we see a bit of weakness, I don't think we'll go to a recession scenario and go negative. So the growth probably will come down a couple of percentage points, if at all, and probably, then get back. So I'm not seeing too much of issues in the long term. But yeah, short term, if there's market volatility, and when I'm saying short term, for me, just to mention that is 2 to 3 months. Okay, so is what I would look at it, and in that period, if there's volatility thanks to global factors, then yes, discretionary spending may take a beating because sentiment is very important, right? And you will also find that certain pockets, say, which are tech oriented, and where even the employer is a global corporation, etc. I think there will be tightness in the job market, so that may drive a little bit of weakness in the sort of short to medium term. But I think that will be more than made up for by the manufacturing and the sort of India domestic sectors.
All right, great. Well, talking about discretionary, we'll also go across to Chetan in a little bit and get some more details on some of the action in the auto space. But I'm also looking at, some of the pockets of the market that are looking a little quiet today. Let me just pull up some of those names. Overall, of course, momentum seems to be intact today, but a few stocks, Max Financial, Solar Industries, a couple of those that are looking a little weak. 3M, Delivery, we just talked about, Adani Transmission, but it's really definitely skewed more towards the gainers overall in today's session. From the industrial segment as well, Anil, and there's been a lot of talk about defense, of course, but in terms of the pockets within industrials, what stands out to you as a theme? Because everyone's always looking out for those multi-baggers or those dark horses that could really come out and surprise. Do you feel that there is some potential within that basket?
Yes, so you may see some of, if you look at some of the other sectors, I think there could be some bit of thing coming in from, so the PSUs, the aviation, HAL, and all of them have been sort of doing well, BEL as well. So you have some of these companies which have done reasonably well on the manufacturing, but the only issue is some of them have already come up a bit. Yes, possibly there's a longer term view out there, and that they may do well. But I mean, somebody who picked it up a little earlier would have seen a multi-bagger. We continue to like sectors like, say, specialty chemicals. I think India has a bit of a play out there, and I think that would sort of come in. Auto, if anybody is booking a vehicle, a car, for example, is likely to see a huge waiting period, and so that should sort of give momentum for a period of time, to the sector. So I think a lot of these pockets of, maybe even auto will sort of trigger auto ancillary and stuff. So maybe those are sectors which hopefully, with the auto sector doing well, coming back and taking on the lead in the future. Pharma is the other one that maybe hopefully will turn around, okay, and start doing well, especially if we see higher risk coming in globally as well. Possibly, I think people look at pharma as a bit of a defensive sector, because technology also this time may be in the mid of the cycle thanks to Nasdaq. So I think manufacturing side is somewhere that I am a lot more bullish. and bullish for a longer period of time. So I'm saying, so if you have the patience, I think some of them will then become multi-baggers over the next, say, 3 to 5 years. So that's a perspective that I would have. There will be a little bit of sector rotation in my view, and manufacturing should possibly do much better.
All right, Anil, thanks so much for joining us on the show today.